What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be taking a look at Tesla's daily chart. We're going to look at where price came from, where price ended today, and where price is likely headed tomorrow and into the rest of the week. Before we get started, don't forget to check out the description below where there's some links to the Discord, to my socials, to some ways you can support the channel, checking out the merch shop, and also some information on how to set up trading accounts if you currently don't have a trading account. There's also some links there in the description below. Don't forget to like, subscribe, and share with all your friends. Really helps support the channel, getting the channel out there and getting it seen by other people. So diving into the chart, we didn't have a really huge day, right? It's a Monday. On Mondays, we're looking for accumulation. I like to see a small range Monday. If you look at the Monday in the previous week, we were in a second stage distribution throughout that whole week. So we saw a huge range Monday, and then we saw a gap on Tuesday. So I do like to see a smaller range Monday for that quarterly theory to potentially play out for accumulation. Right, we have accumulation happening in here. So what we're looking for is Tuesday potentially manipulation. So maybe that manipulation comes to the upside first. And we'll grab our path tool and show what that potentially looks like before we get into a little bit more of the technicals. But maybe that manipulation comes as a sweep on liquidity, potentially all the way up here to 240.90. Where then we would potentially distribute down below the low here of 226, potentially even testing this trend line down here at 218, 219. We might find support inside of this consolidation range that we've been tracking for a while, or again, we might see distribution come all the way down to the support level. So that's something we'll be watching for. Now, if it plays out in the opposite way, right, accumulation, and then we see some manipulation to the downside, the downside manipulation would only, at minimum be taking the low of today or potentially this low here. So we could see manipulation and then distribution to the upside throughout the rest of the week. And that manipulation, if we did start, or that distribution, if we did start heading up, it could take us all the way up to a high of 253 for the week. And so we'll be watching to see what move happens first. But again, that the small range accumulation on a Monday is a good sign because it's a lot easier to see where the manipulation happens or potential manipulation happens when it's a smaller range. When you have such a large range Monday, and then we're looking for manipulation, but last week, like our only manipulation was just this drop here in the wick, and then we continued up. But we had already broken out of that range by Tuesday. So our quarterly theory looks much different when we have large range. And then we had data drops last week on Tuesday and Wednesday. And so we caught that gap. So our manipulation was not taking a low. It was just running down on support, right? Making it look like it was going to come down, and then it ripped it up in the opposite direction. So small range Monday is going to be helpful for us to be able to to closer see the potential manipulation there. Now we do have equal highs in these wicks right here, or relative equal highs. We're going to put that on our chart here, and it's also previous day high being today's high. So we're going to label both those things equal highs, previous day high, and then we're going to label today's low right there. Okay, we're going to say previous day low. And then we're going to mark off the low from last Friday. And so now we have some various different levels that we're going to be watching for. So again, if our manipulation is a move down, we're looking to take the first level, and then potentially you could leave a runner down to the second level if we drop down that far for our manipulation, and then we maybe could continue to catch a distribution leg to the upside. But we are heading also into a holiday weekend, or a holiday week, where the market is a short week and it doesn't have as much trading sessions going on. So it's easier to move the market in a direction with the low volume trading. Also, I was looking at the put to call ratio, and there's significantly more calls, even though it doesn't seem like it's a huge week for options anyways. But those are weeks where it's easier to move the market in a direction. So, is that down? Is that up? We'll be watching. Some things we want to look at on the daily time frame is we've been watching this channel. This channel has been developing. Right now, we are still above the median. We held above it today. We did come down below it, but all in all, we did trade up. What we're doing is running a test on this breakdown candle. And so again, if we break and close above 239.50, that's going to be, in my opinion, our bullish, indicator that we could go long from there. Right now, we're just running a test. So at any point in time, we could get up near there and then drop it down. So I'm not going to really trust it and say, yeah, full bullish up to resistance until we break 239.50. If we can clear that, potentially clear this liquidity level at almost 241, I'd be very confident to say we're heading up into the 250 range, right? We have our daily volume point of control node right there. We have another liquidity, top of a liquidity wick right here. We also have a small fair value gap on the daily time frame in these candles here. And then we have a 15-minute unbalanced price range that we haven't come back to balance yet, above 260. So there's a lot of upside targets that we're looking at. Now, also looking at the downside, if we did close a daily candle below this median level, right, and this median level is pretty tight with today's low, so that could all be taken at once. Say we start trading down tomorrow, we close the candle below 230.91. I would not be fully bearish at that point. We're still in a consolidation range. We are in the lower half of the channel at that point, so it would start to look more bearish. But I would not be confident until we're out of the 230 range heading lower, that we'd be looking at 226.50. We'd be looking at range, consolidation range here. Consolidation range close at 222.83, and then we got a fair value gap inside here on a I think that might be a 4-hour time frame. We'll have to see as we drop down into the other chart, but there is a fair value gap here that we're watching between 221.71 and 216.73, right? And then again, if we dropped down there maybe 1 day, 2 days to get there, we'd be looking at 215, 217, maybe even into the end of the week it'd be closer to 219 or 220. So just depending on how fast we got there, if we started heading down, we got our targets, we got our consolidation zone, which we know has been support and resistance at different times. It was support here when we came down on Friday and we bounced from it. So we'll be watching all of those different things. Also, still on the daily time frame, we do also have this resistance line above. So again, it could take us, even into late week, early next week before we potentially tested that. And so also be watching that resistance line there. And then again, if we did somehow break this channel and start coming lower, which I don't anticipate happening this week, if we were heading lower, I'd be looking at another, not this week, but maybe next week or even the week after that we could potentially test this 205, this consolidation range, the sell side liquidity, and then this support line right here. And then a break of that, which I don't expect, will be taking us down into the 180s, 190s. So let's look at the 4-hour chart. I think that's where that fair value gap came in. Yeah, between this candle here on Monday the 13th and this candle on Monday the 13th as well. We have that fair value gap. We got our magnet here. Right now, it looks like we got a sell-off, and then we've kind of just been consolidating on a higher time frame. We're still within this range here, and what I want to do is I want to grab a rectangle tool, and I want to show you that basically since last Thursday, with the exception of this one wick that didn't even close below, we have been in a consolidation pattern right here. Okay, so we'll be watching again to see if this range high is broken above. We'll be looking on. Let's see if it shows up on the 1-hour chart as well. Yeah, so we'll be watching maybe the 1-hour candles to see if we get a close above 236, 237.36. A close above that, as far as candle bodies go, would be a good sign that we'd be looking for 240, 241, and then 246, 247. Okay, so have this range on your chart. I don't like red, but let's just make it a different color. We'll do it orange. So have that range on your chart. Let's drop even down into 30-minute. So you could potentially also say that on the 30-minute, let's see even further down. Do we have any? No, we got candle closes below it. So we're going to watch it on the 30-minute chart. Okay, that's what I want you guys to do. I want you to watch it on the 30-minute chart because we got no candle closes below on the 30-minute chart, or we got no candle closes above. We've been consolidating in this range since this drop. The wick held. Gave us a reversal wick. We came back up. We're still inside the range. Okay. We didn't clear the range today. So a 30-minute candle closing above this range, we're then going to play the position to 241. And then we're going to play the position potentially up to 246, 247. Okay. Candle closes below this range on the 30-minute chart. Candle closes below 230 basically. We're playing that down to 226.50. And then we're playing it down to 223 and then into this fair value gap and then potentially into support level right there. So I haven't seen any good clear indication as well that we have seen like our fib retracement, smart money reversal. And so that is also something I'm watching for. And if you take your fib tool and you take the low to high here, we have only come up to the equilibrium in our premium discount range, okay, from high to low. I would love to see a quick take on 240, 241 into optimal trade entry, and then I want to see us dump from there. That would give me a better sign that we did see a smart money reversal and that we'd be heading lower, and that also could be a sign that we're going to take out the support level, because if we got a smart money reversal, we're going to get a leg of distribution to the downside, and then we're going to get a pop and then a further leg of distribution to the downside. So that's what we'll be watching for if we hit that 240, 65, maybe give or take just a little bit. I'll be watching that, and again, on Tuesday, that could happen as a move of manipulation. Boom, up here, hit it with a wick or close a candle at it and then dump it down from there. So something I'm watching for. Doesn't mean it's going to happen that way, but that is certainly something that I'm watching for, because we haven't seen any smart money reversals for a little while. And so we'll just be monitoring that with our Fibonacci tool, and that range gives us a nice range to tell what's going on. And again, we can play breakouts to either side of that consolidation range. So let's drop down to the 1 hour chart. Just a little bit better. You see, we were getting distribution candles. Our big 1 hour, it started here. This is the candle I called out that I saw bearish activity. Then we got a nice distribution candle here, displacement candle, another nice displacement candle, and then we got our hammer reversal candle here on the 1 hour, and then a nice bullish candle there. And then again, we've just been kind of consolidating. None of these candles have a large amount of flow in them. We're just kind of going back and forth in that range. There are tradable trades in there. We tried a couple in the Discord. They just we ended up getting stopped out. But you win some, you lose some. It's just the name of the game. We were trying to play some smaller range breakouts or breakdowns during the trading day today. So looking at the 15-minute chart, you see a little bit more of the structure, but this, has been very kind of symmetrical. We jumped up. We had this curve, we jumped down, right? Very similar structure here. Now we're just kind of consolidating. Here we were kind of consolidating. So we'll see if we see something similar where we might see the drop like this as we come down here. But not necessarily going to happen. Haven't seen any break of structures, change of characters that are particularly great. We did see, we were selling off. We saw the break of structure here, but there wasn't much movement there. And then, coming down, if we blow it up, we did see right here, right here there was a change of character. Also right here, we got to break a structure, right? But we had this long wick and this huge doji to kind of open the day. That was the first 15-minute candle of the day. Gave us our range. If you play the range breakout, which is not what we were looking at playing, but if you play the range breakout, you didn't really get much. I mean, here's the top of the range, right? So if you played the range breakout at 236, the most you got, if you timed it perfectly, was $1 move on the stock. If you played the range breakout to the bottom, we never actually broke the bottom. And then we again kind of consolidated to the end of the day. And so we'll see, do we come down and test this line right here and then see a bounce? Do we come into the consolidation range more, maybe taking the low of today, 230.86? Totally possible. So we'll be just looking to see which direction we're headed into the trading session in Tuesday and play it accordingly. And then lastly, we'll just drop down into the 5-minute range. Something I was watching, and this is what I was trading. And I'm going to take this off the chart just for right now. I was trading this small range right here, candle bodies. And what I was watching for was the breakdown. Entered the trade inside of this consolidation range, was looking for a run on this low, 231.83. We never got it. There was a bit of profit here that you could have taken. It wasn't much. It was like 5 or 10%. It wasn't anything noteworthy. But on the trade, we entered. We said stop loss right here, back up at the top of the consolidation range. And so you can see as we traded back up, you could have trailed the stop if you entered that trade and not lost any money, or you could have taken the stop loss back up here, which is where I had mine set, and I got stopped out when we came back up there later during the session. But again, if you enter a trade and it goes positive, you certainly could be moving that stop loss back to break even, because a green trade should never go red. If you're managing the risk properly, you can always get back into the trade later, or you can always take the reverse. Like if you were in this trade and you took it short and you moved your stop, you got stopped at break even if you moved it, accordingly. And then when we came back up here, and we had a candle breakout above, you could have entered that position and you could have caught a ride, again, 235 if you timed it perfectly up to, 237. So it was, again, only like $1.50. But, there's trades there and there's different setups. So looking for those range breakouts can sometimes pay out. Last week we had some really good range breakouts that were in legs of distribution. But today being a Monday and being more or less an accumulation day, we didn't really see any major moves of distribution. And so it just is what it is. So again, that's kind of the structure of the chart. We haven't taken lows. We haven't taken highs. We're just bouncing around here. We'll be watching tomorrow for the manipulation. I hope this has been informative and helpful for you guys. Again, don't forget to like and subscribe. It really helps me out. Find us in the Discords, find us on the socials, and say hi if you come by. Love to know that you're a Rawstocks YouTube viewer, if that's where you found me. Love to hear success stories too. If you're using this, even if you're not taking my trades, I love to hear that you're able to use some of the information that we're getting off the YouTube to be successful trades in your favor. So again, look forward to trading with you guys tomorrow, and we'll talk to you then.